The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, the corn and soybean trade on Thursday seems like it saw a bit of profit taking as we've had this recent weather rally. Wheat was able to end up trading fairly mixed on the session. Cattle had a good day as well. Crude oil under pressure too on Thursday. Here to talk about the market trade with us and hopefully bring us some common sense thoughts. I'm sure he will. He always does. Bryan Doherty, Senior Market Advisor at Total Farm Marketing with us. Bryan, always great to catch up with you. I hope you're doing well.
Thanks, Jesse. It's kind of, we chuckle a little bit, but a lot of times we need to just step back a little bit from the emotion of it and kind of think about common sense and logic. And we see a really, really nice rally in corn prices. Is the end user logically, are they getting concerned? Are they going to jump at this? Or is it just a weather scare that comes and goes? Get into this fourth week of June, it's a little more important, the crop ratings. I personally don't care so much the good and excellent categories. They can shift with rainfalls. But when you dump 12% of the crop in poor to very poor shape, that's a tough one. And then you look at the Drought Monitor map and go, it better rain, timely. And I had one guy tell me, he goes, look, I don't need a lot of rain. I just need 4 timely rains a year, and I'm in good shape. Mm-hmm. Well, we need 4 timely rains, and some of us haven't gotten that, and it's totally understandable, the stress and anxiety that a lot of farmers are starting to feel when they just don't see any rain of consequence coming their way.
Very true. And I know the latest forecasts, and I'll pull the Drought Monitor up on our video feed. The latest Drought Monitor shows that picture that you were talking about. And the forecast really hasn't changed. Maybe some better coverage in Iowa in the 7-day, but something I've noticed here is we keep getting these 7 to 10 to 14-day forecasts, Bryan, that say, oh, rain's coming. And then a week later, well, it's coming in another 7 to 10 days. We keep pushing this rain out, and it doesn't verify in some of these areas that need it most, mainly the I-states, Missouri, et cetera, Bryan.
Well, take a look at that map and look at Colorado and even part of the Panhandle that were problematic forever, and all of a sudden they're not as much, but the dry conditions stay in those key areas you're referring to, and the rain, while it's forecast, I'm not of the confidence level that we're seeing widespread blanket coverage in sort of that central core of the Corn Belt, where we've continued to hear talk of significant deficits of moisture. So timeliness of rains are critical, but we've kind of been through this. And I've had farmers say, 2 weeks ago, I said, we're getting pretty critical, but my corn looks pretty okay yet. And then they said, last week, my corn looks, well, I don't know why it looks pretty. I'm hearing the same thing this week, and they're going, it's hanging in there somehow, but how much longer, they don't know. Maybe the root systems are reaching down into something. But a kind of a common theme, and this isn't a right or wrong, or you know something, or you don't know anything, you don't know what you're talking about. But a common theme in talking to customers this week is the corn really needs rain, and it's looking challenged and tough, but it's still looking okay. The beans, though, they seem to be struggling. They're small, and I keep hearing the same thing over. Boy, I'm out spraying, and they just don't look good. And so I think it just depends, obviously, where you are, but we just haven't had that good, steady, copious rain throughout the Midwest kind of alleviate late May, June weather concerns. And for some now, it kind of looks like it might get in all the way into July, or small rains prior to that. And the saving grace, really, farmers will tell you this, is that the mornings have been kind of cool and the evenings have been kind of cool. And so we haven't had that searing heat. And the 6 to 10 day forecast yesterday, again, kind of pointed toward below normal temperatures in the drier regions. So we're avoiding that really hot. My concern is when that really hot does cycle back in, which it does. It seems every summer. It's summer.
Yeah.
It's summer. That's what summertime is. That's where things are really going to be problematic.
Very true. Very true. Well, and I think Thursday was a case of maybe some farmers rewarding this weather rally here. They maybe missed out on the last rally we had, and then the market set back. So maybe taking some profits on Thursdays, what it really felt like to me in quart of beans, maybe some fund selling in there as well. Brian, is that how you would sum up Thursday's trade in the corn and the bean market?
I have to, when you get to higher prices after such a surge, on any given day, if you're up a dime or down a dime, I'm calling that neutral. You don't need a reason for that. So I didn't see anything in corn today that really alarmed me, but we did finish lower. But we had such a surge yesterday into the close that we just kind of took off the cream. The net of the last 2 days is still 25 cents higher. Um, so the market has finally gotten back to levels where last fall there were some opportunities, and as we talked to farmers, there wasn't an urgency to really sell new crop. You had a big discount to the old crop. If you sold early the year before, you had the rally, you missed all spring. So understandably, human nature is people just didn't get aggressive, and then it kind of slipped. And we talked about the slippery slope for month after month after month, and there just isn't an appetite to sell into that. Got concerning when we dropped under 5. All of a sudden, we zinged back. So farmer selling will pick up here. There's no doubt. And if you've got good-looking corn out there, there's no reason for you not to be doing some type of risk management, whether it be a hedge to arrive, a basis contract, forward sale. My encouragement is just, really spend a few minutes either having a conversation with somebody that's good at this, or put a pencil to your different alternatives and really think about what the next 30 days might look like. Are we right down at $5? Are we challenging $7 in corn? How do you, as a business person and an operator of a farm, handle that?
And it's all about trying to be a savvy marketer in this environment to some extent there, Brian, because you're not only looking at new crop corn, for instance, but even December 24 corn. I know it's at a good level at 555 at the close on Thursday. So, I mean, there's definitely opportunity to lock in some profit, manage some risk here. And again, be savvy, have those conversations as you alluded to.
I think I'd call it just investment. Invest time into it. This is what you do. This is your livelihood. Invest time in it. If you want to get real complicated or sophisticated, great. You're the type of person that might just gravitate and love that. If you're not, take the lead of others around you, and what I call your success wheel. That you're the man in the middle or the woman in the middle, and listen to the people around you that are going to help try and guide you. Doesn't mean they're going to be right, but they sure can get you thinking and give you some ideas or strategies to work with to take advantage of this. And that's the vast majority of producers. There's certainly those out there who they're following some sort of a system or whatnot, but to do nothing might be the biggest risk of all. So that's going to be your strategy. If you are one of these, and I'll wait and see, that's going to be boom, or it could be bust. Might be fine, but usually it's the most riskiest. So we just kind of want to look at different ways to manage that risk and think about the different scenarios that unfold. June, July, August, that sets the tone for the next several months, maybe the next year. If you're priced, you got this idea that China, even though there's some stimulant economic things going on there, that they vocalize that they want to reduce foreign dependency, they want to increase in internal production, decrease usage internally. So we'll see what happens, but we just don't have that robust export market underpinning this. We don't have the demand driver right now. And so we have to use our imagination a little bit. What happens if these importing countries, who are made up of people, just like a cow calf guy might be made up of, look, I need to buy, I can't wait around to find out I need to buy. So we'll see if they jump in and start buying, or if they're going to stay somewhat complacent, buy as needed. But the picture has changed when 12% of your crop is in June rated poor, very poor, that's 1 out of 10 fields you drive by that just doesn't look good. This is not the making of a robust crop, and now you're starting to hear the private estimates start to peg a yield number.
Very good thoughts there. Very good thoughts for sure. We're having a conversation today with Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Bryan, one thought in the soy complex real quick. It feels like this market chart-wise is overbought technically here. And I know bean oil got pummeled Wednesday with the EPA announcement. I know some folks still we're trying to wrap our heads around everything with those numbers, but bean oil was able to rally late in Thursday's session, finished with some green on the screen. So maybe a quick bounce back there in the bean oil market. But this soy complex overall, really, it feels overbought. I mean, is that what you're seeing chart-wise overall?
Well, it is. If you're a technical trader, probably the most favorite I like is to take a look at stochastics. And so there's lines on stochastics and it charts this and that, the other thing, but it's momentum indicators basically. So there's really strong momentum upward on that stochastic chart. And then you get into what's called overbought territory when you set your parameter to what that is. So I'm just looking right now. A lot of people use 70. You can use 80. But right now, November beans 89. So 89 out of a scale of 100. So that's overbought in that world. Now you want to be a little careful when you're consistently high or consistently low. That's also portending, or it's telling you the trend is high, the trend is up, or the trend is down. And we saw very low RSIs for a long time, but nonetheless, they're pretty high and they're considered overbought. And then we look to see if there's any signal within that, or I think traders do. And it looks like you might have got a crossover yesterday or today, where two lines, one a short-term momentum indicator, one's longer term, when one crosses over the other, that's signal. And a lot of people use those. So it looks like we got a signal in there. So it wouldn't shock me at all if those who are following stochastics were sellers today or yesterday, or they move stops up under the market really close. So if the market started to tip over, remember a stop is triggered when the market touches or goes through, and then you get a sell. Well, there's a lot of those there. You get a lot of people selling at one time. It's kind of like a very visual. It's like everybody heading for the gate, or you got a bunch of cattle trying to get through the gate at one time. It just, it becomes problematic. And that's what happened, I think, today in the bean market. Meal was off after a good surge. Oil rebounded. I think you could argue this morning we were kind of reading some reports of Western Iowa, better chances of rain, maybe more chances, 6 to 10 day ahead. North and South Dakota, dry areas, pretty good shots of rain. So we need to see that rain develop now.
Wheat market on Thursday, Bryan, ended up fairly mixed. Anything you're seeing chart-wise there? Supportive, negative, either way?
I really like, we talked about this last week. There's a really nice forming of inverted head and shoulders forming. And awesome, boom, the right shoulder forms and the market takes off. And now we're getting back to levels in July wheat in Chicago where we were at the end of February. Now, wheat's a world crop, so we need to kind of take a look at what's going on elsewhere in the world right now. So, of course, you have Southern Hemisphere competition, and Brazil has good crops and everything, but they only have so much. Argentina stayed dry. So we go to the Northern Hemisphere, hard red winter wheat crop poor, soft red winter wheat. I think this dry weather it will exacerbate or decline the yield for soft red winter wheat. It just will. Not all of it is ready to be harvested here in mid-June, especially the further north you go. So I know in my home state of Wisconsin, I drove by a couple of wheat fields here on Sunday, and they looked really challenged. They didn't have the growth to them. They looked okay, but they just the wrong color. Just that's what happens when you go 3 weeks without rain. So I can't imagine that they're going to surprisingly yield bigger. And then off air, we chatted a little bit about India. And maybe the USDA, there's a lot of talk that USDA maybe, or some talk that the USDA maybe has their crop overestimated by 10 million metric tons. Well, that's a lot. That's almost 40 million bushels. And you take into account, China maybe losing, I don't know, hundreds of millions of bushels of quality wheat based on just a lot of rain at the wrong time.
Definitely a lot of things to think about.
World picture changes.
Yeah, the world picture changes and something to keep our eyes on there, the wheat market for sure. Bryan, livestock, protein sector, cattle, hogs, two different markets on Thursday. Cattle finding some support. I have to think cheaper feed prices help there. Hogs, maybe just some profit-taking pullback there. Not sure. What's your thoughts in the protein sector overall?
I think some hedge pressure on the hogs. They had a pretty good surge. You look at the daily slaughters. We're not by any stretch running out of hogs, but the product has been priced into the supermarket to move. It's cheaper. Beef has priced itself out, in my mind, to the consumers, but it still moves. I don't know how long that lasts. Broken record talk here. Cattle supply sided issue. It's not that we have such amazing demand drivers, but we do have demand. Hogs a little bit more choppy. I'm still perplexed as to why they blew out so hard 2 months ago, and then they came roaring back. But again, we can kind of maybe make the argument they're finding some equilibrium point here, just to put things in some kind of perspective there. June hogs trading around 91. That's basically where they were in March. So we've been higher, we've been lower, and you got your late fall, early winter where we were higher, but then prior to that, basically around these same levels. So I think they're finally trying to get square as to where an equilibrium price is into the summer months. And that's it looks to me like we're at a good point where consolidation should continue. The only concern I have is July got a little bit. I mentioned this to a number of farmers yesterday. We're down 290 today. So yesterday, when you add 290 onto that, you're talking in that $95 area, and got a little bit ahead of the cash index too much. You're already through 3/4 of June. So it doesn't surprise me that we had a day like today ahead of us. I don't know. I don't have a good reason to be negative hogs. So I think what you're going to find, the next Hogs and Pigs report, and if not on that one, the one after, you're going to see where this herd contracted.
Good thoughts there. Any notes in the dairy market, Bryan?
One step forward and 1.5 backwards. Pretty tough down day today after what looked like maybe some promising opportunities for the market to rebound. We're in June. We've kind of focused on the July contract. That is just in a real pickle right now, and it doesn't show any sign that it's done going down. July today, last trade, I'm looking 49 lower at 15.29. So we're on the verge of potentially seeing some new lows, and that's just a tough window to be right now. So as I look at the deferred months, they're still holding too much premium to July, so we stay with hedges. But I would like to make the argument that with corn prices making a substantial change, soybean meal making a substantial change, we're at a catalyst right now. Well, this will begin to speed up the herd liquidation. This month's production report, there was some reduction of cows, but when you look at the change, 24,000, I think it was, on the overall population over 9 million, it's minuscule, it's immaterial. We're not still changing the overall supply of cows. We've got to get those cow numbers now, I think, to get the market turned around.
Well, great thoughts, Bryan. Before we let you go, anything else you want to mention or reiterate to folks listening in today?
Well, let me thank them for the opportunity to speak to them and have them listen. So thanks for that. Boy, some critical crossroads right here. I kind of hinted at it earlier. You could see corn in the next 30 days, $7, $5. So think about the impact to you on that, how much you want to do or don't do, or what risk you want to take or don't want to take. Really concentrate on strategy. When we talk to people, they talk about, we say, okay, if we did this in cash and this in options, and usually what I'll get back, oh, those are expensive. Well, expensive relative to what? So if you really don't know options, they will become inflated in volatile times, but there's somebody else out there willing to take the risk to allow you, if you're a buyer, to participate in a market with quantified risk and unlimited potential. So they might have to get paid a little bit more in that environment, and then there's methods to work with that, but just you've got a lot of good tools to work with. So sharpen the pencil, take a look at your tools, have good conversations with the right people that can help you. And then, of course, as always, just stay safe.
Well, and of course, if anyone wants to have a conversation with you and the team there at Total Farm Marketing, I know a lot of great ways to get in touch. Phone call, email, website, all three available, aren't they, Bryan?
All three. Website's a great resource. You can click on that, totalfarmmarketing.com. I wrote Top Farmer for 25 years, so so I get a mulligan there. So totalfarmmarketing.com. We've got email accessible. Love it when we get questions there. Bryan with a Y at totalfarmmarketing.com. Or what I really love is just the quick conversations that we can have with you, and just allow me to jot a few notes down, and think on things that maybe I can respond back to and give you some clarity. 800-334-9779.
Well, we appreciate the time as always. Bryan Doherty, Senior Market Advisor with Total Farm Marketing. Thanks for joining us. Have an awesome weekend. We'll talk to you next week, Bryan.
You betcha. Thank you.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.